the $1 Million Mortgage Experience Podcast. All right, welcome to the podcast. Today we are here with Aron Jimenez. He's a top producing mortgage broker at Secure Choice Lending. Grew up in Southern California, is a husband, father of two, and he specializes in helping first-time homebuyers, right?
Yes, and amongst other homebuyers as well. But yes, thank you.
You don't discriminate, right?
Thanks for having us. Thanks for having me.
Yeah.
My one of my guys is here, but thanks for having me.
Yeah. No, I'm excited because, we're really trying to interview people who are crushing it in this market because this is, as we know, rates are, not the best.
Sure.
And so just to have someone on that's doing different things, doing new things,
Sure.
kind of giving my listeners some tips and tricks on how to, succeed in 2023,
absolutely.
right?
Yeah, absolutely. Excited to be here, man.
Awesome. And before we go too far, please like, share, subscribe, do a little comment, and keep watching. So tell me your story. Like, how'd you get in the mortgage business?
Sure. Okay. Yeah. So I was telling the guys here because they've heard my story a couple times, but as I was mentioning before the podcast started, at 19 years old, when I was in college, I started working at Wells Fargo Bank as a teller while I was going to school. I was a teller for a couple years.
A teller too?
Yeah, there you go. Cashing checks, kind of learning how the banking world worked, right? Depositing checks, opening accounts, doing credit card applications, doing personal loan applications. And then when I graduated college, like 2 years later, like when I was like 22, 23, I was like full-time banking. Like back then they called it a personal banker.
Yep.
So I was a personal banker for like 4 or 5 years, like
wear
opening new suit, opening new accounts, checking accounts, savings accounts, credit cards, debit cards, direct deposits. Online banking was considered a sale. Personal loans.
Did you ever look up like celebrities like Robert De Niro?
I can't. I don't want to get sued, but maybe.
I totally did that.
Yeah, but I did. There you go. So I did. I'm not gonna lie.
But you don't tell anyone about it, right? But you just
I'm not gonna tell you who I looked up.
What is
but I did look up a lot of people.
Have in their account, right? Like you're like, oh, they
always
don't have
curious.
as much as I thought they did.
Yeah, and it never came to mind until a guy, one of my coworkers, and his name is Ricky. He was like, "Hey, dude, do you know so and so banks with us?" I'm like, "What?" He's like, "Oh yeah, I looked up his accounts. Look him up.
It's loaded."
He would even give me his account numbers and be like, "Look at this guy's account."
Yeah,
and I'd be like, "Holy shit, that's a lot of money." Now I heard, because my brother still works at a bank. He's been in banking for like 20 years. He's a financial advisor. And now, if you have a bunch of money at the bank, the tellers, the bank employees can't even see, like that's a teller window. They can't even see your balances.
Really?
They're like blacked out.
They black them out.
You have to talk to you have to call somebody else,
like a manager,
to see like what your actual balance is, right? But anyways, going back to my story, teller, banker for a few years, and then I graduated college, got my bachelor's degree, whatever. Was like, okay, cool. Now I got to tackle the corporate world and move up in banking.
Right.
I was like 22, 23 at the time. So I did that until I was like 26 and being a personal banker. I became a branch manager, got promoted, moved up the ranks, assistant manager, supervisor, and then I became a bank branch manager. Cool. Right. So I'm the guy that you talked to when you had a complaint about your account being overdrawn or whatever the case may be. Right.
Right.
I was that guy. Did that for 4 years. Learned a lot about banking, loans. I did home equity loans as a manager, not mortgages, but we would do HELOCs or home equity lines of credit on the retail side. The actual loan officers and at Wells Fargo, like the LOs, wouldn't really do those. They would refer them back to the branch. So I would do
easier process.
They were easier, yeah. It was an application, and Wells Fargo underwriting would take care of it, and they would update the conditions, and you would just send them in and all that good stuff. But I did that, and then I was like 28, 29. And I was getting serious with my now wife. We were dating. I'm like, you know what? Before I turn 30, like this can't be it. I can't be in banking wearing a fucking suit and tie for 10 years. Now I'm approaching 10 years. I just can't. I need to do something else before I turn 30. Yeah. I love credit. I love working one-on-one. I like sales. For some reason, like, because I bought a couple of houses in my 20s. Like, I enjoyed the process. I was like very curious about the process, like underwriting and credit and mortgages. So it always caught my attention. So I'd always like ask my loan officer, the guy at my office, like a lot of questions, picked his brain a lot. So yeah, before I turned 30, I was 29. I left a salary of $100,000 as a bank manager, and I went in to loans or mortgage at Wells Fargo, 100% commission, no salary. So I saved up a bunch of money. Well, 6 months worth of reserves, right?
Sure.
I calculated my car payment, my expenses, my rent. I rented my house out at the time, and I moved. This was all planned, right? I rented my house out.
Right.
And like, okay, cool. The mortgage is covered. I moved back to my folks. My parents said, come on over.
How'd your wife feel about that?
So, well, I wasn't married at the time.
Fiance?
Yeah, just not even
Not
dating.
even, okay.
She was still living with her folks. I was living with my folks, but we were getting serious, but we weren't living together yet. And then saved up 6 months of funds, moved back to my parents. They were supporting me. I left, went into loans, and I remember I didn't make any money for 5 months, and I was literally down to like my $1,000 left in my account.
Wow.
And I'm like, shit. If this doesn't work, if I don't get a nice fat check, I have to go back into the banking world.
Yep.
I did well, and I was, well respected in the banking world. So district managers and my higher ups would go, hey, if you ever need a job, come back, blah, blah. I know mortgages are tough. Everyone fails.
Yeah.
Right? It's not for everybody. Like only a small percentage, succeed. Literally, I remember because it was Memorial Day weekend of 2015, and I left that November, 6 months prior. And I remember my girlfriend and some friends invited us to Palm Springs for the weekend. And I'm like, shit, I'm not sure if I'm going to go. I don't have any money.
Yeah.
Got paid like a week before. It was like $5,000. I was like, so jumping up and down. Like, I made it. I made it.
Got $5,000.
Yeah, I got $5,000. I'm like, I'm back. I had low expenses at the time. Mind you, it was like living with my parents. $5,000 to me at that time was a lot of money.
Totally. Was that your net check or was
that was my net check?
Oh, that's, yeah.
I think I
buy a lot of beer.
You know what? It was like $7,000. And I claimed exempt. This is W-2, Wells Fargo. So they took like state taxes and like 401k. So I got like $5,500. Right?
Nice.
I was like, yes, I'm back. So yeah, had a good time in Palm Springs, right? And then the rest was history. The loans just started coming.
That's cool.
And the rest is history. That was May of 2015. So what, almost 8 years ago.
Yep. So
I've been in loans, doing loans got my originated my first loan in 2015.
Nice.
And I always tell people this story and I tell homeowners this now. When people are on the fence about, especially first-time home buyers, but whether it's the right time to buy or they're scared or they see the payment, when you go over the payment with them, they're like, shit, that payment's what, especially today, $4,000. Where I live, in Riverside County, that's the area that I serve in primarily. Riverside, San Bernardino County, the Inland Empire, the IE. First-time home buyer, I mean, you're looking at a $4,000 payment. FHA 3.5% down or 5% down conventional, $550,000, $600,000 house. They're like, holy shit, this is really expensive.
Yeah,
they're paying rent right now, $1,500, $2,000, maybe $2,500, or maybe they live with their folks. So I tell them this story. I said, look, real estate changed my life. I really did. Yeah. Because when I left retail loan officer and I went into like direct lending world, I needed money. I didn't have the Wells Fargo enterprise anymore to get referrals. So when I was a loan officer, as you probably know, I didn't have to worry about getting realtor business. Right. Like I didn't give a shit. Yeah. I would sit down in my branch. I had a branch assigned to me.
And they just come in.
And the tellers, the bankers, like, hey, Aaron, Mr. Smith is here. He wants to refinance his house. He wants to know what rates are. Come on over, Mr. Smith. Right. Have a seat. What's your current rate? And it was most likely had a Wells Fargo loan. Okay, 6% rate. Rates are today are 4%. Awesome. No brainer. Yeah, let's do it. What's the payment on that? I'm like, yeah, you're going to save a bunch of money. Let's do it. 1003 right then and there. Yep. Literally, print disclosures, have them sign, submit it to underwriting. I'm like, come back and bring your paycheck stubs, your W-2s or whatnot. And then when I was leaving, I was like, shit, I don't have any realtor relationships. Right. All the referrals that I get are from the enterprise, the Wells Fargo enterprise, right? People walking into the bank, that bank with Wells Fargo. So I got like a one realtor relationship, maybe one, maybe two. Nothing like where I was like, oh yeah, you should go on your own, right? And yes, granted, at Wells Fargo, you make $1,200 a pop a loan. Right. Like, yes, if your loan was like over like $600,000, you'd make more money. But for the most part, I was getting paid flat fee of $1,200. To make decent money, I had to do 10 loans a month. Right. With no junior, no assistant, just my processor and an underwriter. I was banging out 10 loans a month, all by myself. Literally, I would take a 1003, have another appointment to collect conditions, submit them, and then do it all over again with other clients. So I always tell clients this. Oh, the reason I bring this up is because when I left Wells Fargo and I went into direct lending world, I knew that I had to acquire real estate relationships, right? That's because I'm like, those are going to be my referral sources. Way you can get biz, yeah. So I had a piece of real estate that I owned. Remember that house that I told you that I rented out years back? Did never move back. Stayed with my parents. I got an apartment with my fiance and now wife. And I'm like, shit, what am I going to do for money? Like, I know realtors, I have to take realtors out to lunch. I have to host events. Yep. I have to like market on Zillow. Right? So I'm like, man, damn, I own real estate. I'm like, wait a minute, I bought my house in 2009. Looked on Zillow. I'm like, oh shit, I never refinanced. was back in the day when you get an FHA loan, the PMI comes off on its own after you have enough equity. Now that doesn't happen. PMI was off. I'd never had to refinance. I'm like, should I have a lot of equity? And I'm like, okay. I sold my house. I decided to sell my house, made a bunch of money, put it in my account, and went to work. And then started hitting up.
Invested right in yourself. Yeah.
In my attire, my business, my car. I had a BMW. I'm like, I have to be the part.
Right.
I have to play the part. Took every real estate I knew that I could hit up on Instagram or social media, friends of friends or closing agents on transactions, invited them all to lunch, bought them a bunch of beer, drinks, food, and then became friends with a lot of them.
That's the way you do it, right?
Yeah, literally just build a good relationship. I'm like, oh, you're a cool guy. I'm like, oh, you're a cool guy too. And
let's work together.
Let's work together.
Yeah.
The rest is history. And then from there, the rest is history. We just off we went.
That's cool.
So that's my story. So I always tell people, buy real estate because real estate will set you up for financial success. It really will, and it did for me in a big way. Had I owned a piece of real estate, I wouldn't have had the confidence to leave Wells Fargo Bank and start my own business and lending. If I didn't have that financial support of having a bunch of money that I could leverage.
It's amazing what happens when you buy real estate. I mean, granted, 08s are the black swans that happen, but that was 70 years in the making. So it took people are all still scared of that because we don't have. We get amnesia, but not right now because it's too recent. And then, the pandemic, no one knew what to do. It was like, is this going to be another 08? And, but man, if you own real estate, like you said, like it's crazy how much it'll change your net worth as an individual. It's
absolutely,
especially if you own multiple properties.
Oh, yeah.
Like it's just the acceleration of your net worth is massive because it's just, the dollars just gets weaker and weaker every year. I mean, we all remember those stories that our parents you could buy ice cream at, 5 cents or 10 cents or
gas.
Dude, I remember, and I sound now old, but I remember buying at Thrifty, 35 cents and 25 cents for a scoop of ice cream.
Oh, for sure. Yeah.
And now it's like $4. I don't even know what it is because I don't go buy ice cream at Thrifty's, but it's got to be $10, $8, $6, something like that. A scoop,
I remember in high school, I had a red Celica, Toyota Celica. I don't think they even make Celicas anymore. Marcos, you're a car guy, so he might know. It was like shared between like me, my sister, and my brother. It was like the family car because we're all similar in age. And my friends, it was like a red sauce. It was a red car, like it was kind of sporty. And my friends called it the Sauce-mobile. It was a red little the Sauce-mobile. So anyways, going out, literally, I remember getting $2 or $3 together to put gas in my tank to just make it to school and back and go to Jack in the Box and have lunch and come back. $2 or $3 did it. Yeah. I could okay, cool. I'm putting gas in my car. Give me anybody have a buck? Yeah. Three of us. Here you go, $3. Great.
Get a couple gallons.
A couple gallons. It'll last you 30 miles to the gallon, 40 miles to the gallon or whatever. But yeah, it's crazy. I read something the other day, or I saw something on Instagram. Who said this? It could be an influencer or a rap star or something. If you don't own land, you don't own anything. Yeah. And that's why real estate is so powerful, and that's why I'm a firm believer to buy and acquire real estate, right? Mm-hmm. Is because, I kind of feel that way.
Have you read Rich Dad, Poor Dad?
Of course.
Dude, yeah. I mean, I made my kids read that. They when they were 15, I think, and they were like, Dad, I don't want to read this, but they read it, and I'm this is the book that kind of changed my life in a way. Is it? Yeah. I mean, it was I remember reading it a long time ago, and I had already bought real estate, but then I was like, this is just such they don't teach this in school, right? And it's literally the pathway to success and the pathway to being rich, having wealth or having any kind of net worth, versus
absolutely.
Most people, they have paycheck to paycheck, right? And you're just well, if you could figure out how to buy a house, and everyone could figure out how to do it.
Oh, absolutely.
Just got to save a little bit.
Can't be loans, baby. There you
go. You can't be so bougie, right? You're buying the most expensive clothes. You could cut back on some things and then save a little bit of money. Do an FHA loan. Get a little, whatever. I know you probably do more. You do FHAs, right?
A lot of FHAs, a lot of conventional.
So VA deals. You can probably get assistance to even down payments now, right?
Oh yeah, absolutely. I used to do a lot of down payment assistance loans, a lot of them. Now, not so popular because rates are so high. Yeah. Even for those programs. So sometimes it doesn't make sense because there's they limit the debt to income ratio requirements. Right. And with rates being so high, I mean, you might qualify for a few $100,000. It's not going to be enough. Not even in Riverside County. But yeah.
Now people are doing GoFundMe for down payments.
Seriously.
You're like, oh, really? You want to help Joe buy a house, I guess? Here's $20, Joe.
It's funny in my world because FHA, first time home buyer, having the assets section of the application,
Yeah.
or like the down payment, is like the least of my worries. Because in my world, I always tell everybody, people could, if you tell them what they qualify for, you tell them, here's your payment.
Yep.
Here's what you can qualify for that payment. A house that costs $600,000 or $550,000.
Right.
And it's in line with what they're thinking and what they want and what they see on Zillow.
Mm-hmm.
And you tell them, okay, but how much money do you have saved up? They're like, oh, only a few $1,000s. I'm like $7,000. I'm like, okay, well, just so you know, $550,000 times 3.5% is X.
Yep.
$17,250, for example. I'm not even sure if that's the number.
Pretty close.
You need to have that at least. Closing costs will figure it out.
Yeah.
Okay, do you have it 401k, mom and dad, grandparents, and an uncle? They're like, no. Always initially say no. No, I don't think so. No.
Yeah.
Get a call back or a text back, or they talk to the realtor a few days later. Hey, they're ready to start looking. I'm like, yeah, but last time I talked to John, he said that he didn't have enough money for even the down payment, let alone the closing costs. So I guess his mom's going to help him out. His mom's loaded, blah, blah, blah. I'm like, they always come up with the money.
Yeah.
As long as you could show them, you could buy a house
that
costs this much, and it's in line with what they think and their
Right.
perspective, and they're okay with the payment, they always figure out the down payment portion of it.
Right.
It's the funniest thing. Either an old 401k or a stimulus check in the last couple of years.
Yeah, they get some kind
or
of bonus.
a bonus
something.
coming up.
Yeah.
Or they're right now, tax season.
Right. Get some
Just had a client-
refund.
Just
Yeah.
had a client. He's like, yeah, I'm like, hey, your bank statement, you only show like $3,000. You need like, if you're buying a house for $450, you need like, $15,000 minimum down payment. Oh yeah, I have it. I'm like, where is it? Oh, tax refund. I already filed my tax. I got $14,000 back. I should be getting in like 2 weeks. So I'll have like $18,000. I'm like, nice. So that's that's kind of like a lot of the clients that I work with, which is awesome because I don't get shopped a lot when it comes to rates.
That's cool.
And I offer obviously competitive rates. We're at SCL, Secure Trust Lending. We're a broker, so our FHA rates are fucking awesome.
Nice.
Sorry, can I cuss?
Yeah.
Okay. I edit it.
I mean, I think a lot of people cuss. So,
Okay. Yeah.
if you're offended by a cuss word, then,
I don't know. So yeah. So we have really good rates anyways. So when I just taking the time to explain to a first-time home buyer why they should buy a house and tell the story of how it helped you and your family is so freaking impactful. And then our process is tailored for first-time home buyers. We want to educate them.
Mm-hmm.
We always say we're an education-based mortgage company, right? Or my team is. Because we think, and I firmly believe this, if you're going to buy your first house, or if you haven't bought a house since the 1990s, right? And you're now in your 50s and you want to sell and move up because you're getting ready to retire. If you haven't bought a house in a long time, it amazes me that people do not meet. If you don't know, like we know about loans, right? We can read an LE and shop around. But like, if you're a first-time home buyer, if you haven't bought a house in a freaking very long time and you're like, I don't know, a lineman, you don't really know about mortgage, you just know that you have a mortgage. It amazes me how people do not want to meet, or lenders do not offer in-person or Zoom consultations.
Yeah.
It's crazy.
They just only do phone?
But you buy a car that costs like $50,000,
Right.
and you have to go down to the fucking dealership for your entire fucking day.
Yeah.
It's annoying.
I just did it with my daughter.
To
Her first car. And it was like,
haggle.
I was like, this is a long process.
Yeah.
Like, then you got to go to the finance department.
You even know the car that you want. It still takes 3 to 4 hours.
Yeah.
But a mortgage, you could go on Quicken and Rocket Mortgage and you just say you're pre-qualified. Here's an LE. Let me know when you find a house.
Yeah.
That's crazy to me.
Yeah.
That is insane to
me. And that people don't want to meet with their clients.
Yeah.
Like, if you're listening to this podcast and you don't want to meet with your client, I don't know what to tell you.
Yeah.
You just lost your touch with the reality.
Absolutely.
Like, I mean, maybe you like a super tech person, right? But like, I mean,
or you buy multiple homes and you just want to, hey, what's the best rate?
Yeah.
This is what I want to do. I already know my down payment. I know how to calculate my own payment.
I mean, people do business outside of their areas, so I get why maybe they don't. But Zoom, right? Like, put a face to a name, because you got to build rapport. Like, and most people don't even. I think most loan officers, correct me if I'm wrong, don't even go through the 1003 anymore. They send a link, and then the borrower does it, right? And then if they don't do it, they're like, borrower didn't do their 1003, and then email them and bug them about it. Like, no, I mean, that was the best way for me to build rapport with my customer.
Is during the 1003?
During the 1003.
That's awesome.
And then when I would do that, I would we'd talk about their kids, we talk about their dog, we talk about their dreams, and it just was this like magical, lost art that I think people don't do anymore because of the technology. But if you take like 10 minutes, 15 minutes with your borrower, like, think about this, they're not going to want to do that with anyone else.
No.
So you kind of take them off the street, right?
Yeah.
You remove the competition in a way. When I got in the mortgage business, we had this thing called loan lookups. So we would go, we would drive, and we had a company car. I was with this subprime company called UC Lending, and we would call them lookups. And our tagline was, "You want to take them off the street." And it was like, so we would get all their docs, like all their originals, their tax returns, their pay stubs, so no one else could get it, right?
Yes.
And so we would get their stuff, and we'll get it back to you as soon as, or if you need it back, we'll give it back to you, but we'll take it to the office, get it in front of the underwriter, and then, and then we'd meet with them. We'd do the 1003 by hand, and you would be in their home, so that it's like, people don't invite you into your home unless they're comfortable with you. So it's like this amazing way, and I think the pull through rate was just so phenomenal.
Especially when that borrower who dropped off their documents at your place or your office, and you have the originals, and then for some reason someone else gets in their ear about, hey, I do loans too. Yeah. Let me give you a second opinion. Let me see your documents. Oh, dang.
They're over here.
Jon, Aron has them. I gotta call Aron, and it's kind of down the road. I'm good. Yeah. I like Jon anyways. I like Aron anyways.
Right. He spent a lot of time with me. We talked about your the football game, whatever. Yeah. And he had me over for a barbecue. So it's like, I think this business it started out back in the day, right? It was a very personal business, kind of to your point about the car loans. Like, you have to have a personal, relationship with the person. It's totally got completely away from that. I think it's time to get back to that.
Oh, absolutely.
If you want to crush it in 23, right?
Exactly. If the people who are going to survive 2023 and going forward are the people who provide the most value and actually care about their clients, who are trustworthy, who take the time to educate their clients. And how do you do that without spending at least 30 minutes, an hour with them, either via Zoom or in person? Yeah. And then not only that, once you meet them in person, it's over. It's like, forget about shopping. And I'm like, hey, I always ask this question. Hey, I know you've been through you were referred to by Jon, my realtor partner. He says you were pre-approved with like a family friend or like somebody you knew in the past. Yeah. Okay, awesome. Let me ask you, before we get started, how was your experience with that other lender? 9 out of 10 times, maybe 9.5 out of 10 times. I mean, it really wasn't an experience. It was just, he sent me a link, I completed it, and I uploaded the documents, and then he just like, the next day he like emailed me that I was pre-approved, and he sent me like here, I have it right here in my email. Hold on a second. Yeah, I'm like, can you forward that to me? It's literally just a fucking LE or just an email with font showing what they're qualified for.
There's no personal. It's like a robot.
And I'm like, that's it. Like, yeah. I'm like, I apologize. I'm so sorry you had that experience. Why? I'm like, yeah, that's kind of most of the lending world, to be honest with you. But we're different. Let me tell you why we're different. During this consultation, I'm going to show you a lot of different options. I'm going to share my screen, or if we're in person, I take them to my office, show them the big screen, mirror my computer, show them different options, FHA, conventional. We show them ways to get their credit score up. We bring up a house that they like, that they saw on Zillow that night before. Wife gets all excited. Oh, I saw a house last night. I'm like, yeah, this is the payment on this house. She looks at her, we could do that, huh, babe? I'm like, yeah, there you go. You get qualified for this. Yeah. Awesome. There's no shopping.
See, what you're doing there is you're creating an emotion. Yeah. Right? You're tying an emotion to this really boring experience of finance, right? But you're creating something where they're going to remember that, because they're like, this house. And like, so that's when I, right now there's really no refis. There's cash out refis. But
wait, there isn't? Why not?
There's not. Yeah. I know. But like, there's seconds, and, we do these seconds, right? And I hear it all the time from people. I'm sure Brandon doesn't even want to do seconds because they're small, but like, you can get that emotion out of them. Like, do you want to like redo your kitchen? And then they go, oh, I would love this kitchen. I saw it on Pinterest, blah, 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 blah. Oh, you talk to them about the kitchen, right? You're not talking about the loan or the payment or the rate. You're talking about the kitchen. Well, what else would you do to the kitchen? Or what about a pool? Do you have a pool? Yeah, I build a pool. And your kids are like 5 or 4, whatever. You're putting this they're imagining this life that they have with a pool, and tying it to you and all this. And then, dude, then they love you, right? Like they have this emotion tied to it.
Right. No, I get it.
Versus someone that just sends an LE.
Yeah, it's
your payment, here's your rate.
It's so crazy.
Call me if you're ready.
Yeah, and once in a while when like I'm in a rush and I feel like customers and realtors are rushing me to like get this spit this pre-approval out, and I've done that and I could do that and I don't like it. I feel sleazy. Like, this is it. Like, I just took a 1003. He completed an application. He wants a pre-approval letter right away. Like, I want to talk to this guy. I want to talk to him and his wife. I want to talk to her. Like, I want to build rapport. I want to see if this is even a good fit. Right. I'm not a transactional guy. I'm not going to just give you a loan. Yep. And say, and I make commission, and then I feel bad about that. Mm-hmm. Like, I need to build a relationship with you to see if it's a good fit. Like, hey, do you want to go through the experience? And most of the time they do. Yeah. Once in a while you get a guy like, oh, no, thank you. I bought many homes before. what's your lowest rate?
Yep.
And we could do that too. Don't get me wrong. But our bread and butter.
I bet you get referrals too from them.
Oh, yeah.
Like from their friends, and they're like, oh, my friend needs to buy a house. Talk to
I've had people, hey, this is awesome, by the way. My son is looking to buy his first house, him and his wife. He's 25 years old. He's a firefighter. I would love for him to sit through this consultation. I know this. I've bought many homes before, but this is really, and not only that, even the people that have bought homes before, you show them the 2-1 buy down.
Mm-hmm.
They didn't have heard of that 10 years ago.
Right.
You show them what a seller credit can do. Right. They're just like, oh, damn. I mean, you know about this?
Yeah.
No. 3-2-1 buy down. No, this is awesome. Okay. Now you're showing them something. Now it's like all the guard is down.
Yeah.
Now they're a raving fan. So yeah, I think the business is, like I mentioned earlier, people who are going to survive going forward are the people who take the time to educate their clients and provide an excellent client experience and a memorable one.
Yep.
Right. Because spinning out spinning out LEs is that thing of the past. You survive when rates were free. When rates were like 1 or 2%, whatever, 2-3 years ago.
Then you just
every knucklehead made a bunch of money, right?
So easy, yeah.
But nowadays, like the true professional, an advisor, or the ones that are going to capture market share.
Well, what else are people going to do? You know, people leave the mortgage business and they go become a waiter again, and you're like,
sell cars,
but you're like, how much money are you going to make if you close this deal, and how much time are you going to spend on it?
Right.
You're going to go be a waiter. You're going to be work another job that's W-2'd or something that's by the hour. Like, you could take that $8,000 commission or $6,000, whatever it is, right? Whatever your comp plan is, and say like, okay, I'm going to spend, if I were to spend what I was going to make as a wage at this other job on this customer,
right?
Which you're never going to spend that much time. Like for $8,000 you'd make in 1 month of working at like a restaurant, right?
Yeah.
You're going to, if that, and then you're going to, have one customer that you spend 4 hours on. Right? Like if you really look at it that way, right? Like it's unbelievable how, no, I don't want to spend that much time on this bar. Really? Like you're going to make this much money.
People tell me that all the time.
Yeah.
Like, you're crazy for what you do for your clients. You spend that much time with them? That's insane. I'm like,
we have to change our mindset.
It works.
Our mindsets need to readjust to like, look, this is work, and I'm going to invest the time in this customer because not only are they going to be my client for life, but they're going to have 3 or 4 referrals when I close.
Oh, absolutely.
For friends and family or whatever. And so it's going to turn into, that's marketing dollars that I just invested into for free. And referrals are way better than leads.
Right. Oh, absolutely. And it's funny that you say that. Long-term client relationships is super important because my philosophy has always been, if I could just get a lot of clients, I don't need every single client, and do such a good job with the clients that I have, and be like their mortgage advisor, not just for this house, but for their next 2 or 3 homes.
Right. Help them buy investment property.
Help them build a real estate portfolio, and they're going to introduce me to friends and family and coworkers and their daughters and their sons. I'm going to have a full business, and I could probably pass this business down to my kids. Yeah. When I'm in my 60s and 70s,
Absolutely.
right? And they're going to help. We're going to help their kids. Yeah. And their grandkids buy homes. Right. That's what I'm trying to establish. And everyone's like, oh, new transactions, new deals, new people. It's like, no, do a really good job with the clients that you have. Yeah. That's going to, and then there's no shopping. You don't have to worry about people like, hey, why didn't he call you back? Because you found a better rate. You didn't provide any value. Sure. They don't care about you. Yeah. They just met you like through an email. Yeah. But if you spend time with them, you know them for a long time, they're not going anywhere. Right. It's kind of like a family office for a mortgage. Mm-hmm. Like I want to be the family office for a lot of people in my area. And they'll trust you. This is the go-to mortgage guy. They'll trust you with like, should I invest in Bitcoin? Yeah. Or should I invest in the stock? What should I, what should I do? Invest in my 401k. Could you just help them with the biggest asset of their life? Of course. Right? Yeah. So how do you get business? Like right now, I mean, I know you've built a book of business, right? Sure. And you probably have realtors, but like, let's say your pipeline, I don't know what it is today, but let's just say it's down. Like what would you do to drum up some business right now? Ooh. Or what are you doing to drum up business? Yeah. I mean, luckily we've been fortunate, even with the rates going up in the last year or so. We've been fortunate because we work with a lot of really good realtors in my marketplace. I have some really solid relationships with some top realtor teams in my area. So we haven't really been down too much, but yeah, we've suffered a little bit, right? We felt the rates when the rates went up. The rate refis went away completely, pretty much. What am I doing now? Is getting back to the basics, John. Literally getting back to the basics is doing open houses. I'm doing an open house every other weekend. Yeah, my guys. He's one of them's here. He does an open house every other weekend too. It's required to do an open house every other weekend. We pick up deals. Yeah, we pick up like 2 deals a month. Just in the last 6 months from open houses. And how long are you there? 2-3 hours? I'm there the whole time. So like I mean, the open house could be 3-4 hours. Right. So I'm usually there 3 hours. Yeah. So it's not like an all day thing. And it's, I'm working during the week, and on a Saturday, if I do an open house, I tell my wife, hey, babe, I'm going to be gone from 12 to 3. I'll be right back.
Yep.
She's like, okay, cool. You're doing an open house.
Yeah.
Like, I'm not blowing the Saturday where I'm not with her and the
You're
kids.
not golfing or you're out.
Exactly.
Out,
I'm just out for a few hours. So getting back to the basics is doing open houses, leveraging your realtor resources, and really making sure that they're still your partner.
Right.
Because there's so many lenders right now suffering, and they're all in your realtor's ears.
Oh, for sure.
Sending them a text, sliding up in their DM, in their messenger. You better believe they are.
Yeah.
Right? It's normal.
And you know what they're not doing? They're not helping the realtor get business.
Correct.
And so that realtor's just like, God, probably annoyed with those calls where there's like, hey, you got any
lender?
You got any buyers? You got
another lender?
Anyone I can pre-qual?
Yep.
No. What if you would take a different approach and say, how can I get a realtor some business and help them and brainstorm about how to get business? Right?
Oh yeah.
They're not, like, most people aren't doing that.
No, not at all. It's just most lenders are gimme.
Right.
My philosophy's always been Again, I'm not huge on social media, but I do get referrals on social media, because I've done such a good job in my 8-year career of providing value and really rolling out the red carpet for our clients and providing a really good experience before, during, and after the transaction.
Right.
That it's pretty awesome that you refer me a client, John, you're my realtor, you're a realtor partner of mine. You refer me, I don't know, a next coworker of yours. And then when that coworker's ready to sell that house and buy another house and they want to see what it looks like, they don't call you. They call me first.
Yeah.
Because they know that I know what I'm talking about when it comes to, I could do a net sheet. I know what that looks like. I could tell you what it's going to look like if you sell your house and make that money and pay off debt, pay off debt, put money away for retirement, and then use a portion of that for down payment. I could run through all that with you. I could
help you get cash out to use it to
buy another investment property. So it's nice when realtors, the customers reach out to us first and not the realtor. So when I get a customer, hey, realtor buddy, you remember John? Oh yeah, my old coworker. We closed that deal 2 years ago. Yeah. Well, I keep in contact with her because I have an excellent CRM.
Yep.
So I'm always in front of them every month. She actually reached out to me because she's thinking about selling her house and buying another house with the equity in her house. And she wants to go over some options, maybe putting all the money down, half the money down, and maybe paying off some debt, maybe buying an Airbnb. So I'm going to be with her on Monday. Just want to give you a heads up. I'm going to mention your name.
Yeah.
Did she mention my name already? I'm like, she has not. Well, hey, you referred that to me 2 years ago.
Yeah.
That's our client.
That's gold.
Oh, thank you so much. And they love, even though maybe they get a little jealous that they reached out to me first.
Yeah.
At the end of the day, they know
they're
that
so thankful.
They're so thankful that they have a legitimate partner that they know that I'm loyal and I'm going to give it right back to them because they refer that to us in the beginning.
Dude, that's gold.
Yeah, absolutely.
What other ways you get business?
Past client relationships. Really, you just open house, past clients, right? And
do you just reach out to like past clients, like call them?
Never.
CRM does.
Your CRM automatically does.
My guy that handles my CRM, my right hand. It
just kind of like keeps them in touch. Like, hey, rates like a market update.
We have drip camp. Like when a deal closes, they're on our close campaign, so they get.
So they're usually calling you.
They call us. They text us, email us.
And you're not just like bothering them, but they get the email and they'll see it. So
it's where like during COVID, I did like manually reach out to a lot of my past VIP clients. Like, hey, John, I'm not sure if you heard, but rates are at an all-time low.
Yeah.
You bought your house back in 2017 at a 4.5% or a 5%. Rates are now 2.5%. Let's run the numbers.
Do you want to have
we did that
low payment?
Yeah, we did that. Don't get me wrong.
Yeah.
But now, no, people will call us because we're always our CRM and the tools that I have to stay in front of our clients after the closed transaction is so elaborate that when they think of financing, home financing,
you're top of mind. Yeah,
I'm top of mind.
Yeah,
and they just shoot me a text, or send me a DM. I either email them every month or every other month, or a text goes out. So they just reply, I know, Aaron. And like I said before the podcast, I make it a point to follow either on Facebook or Instagram all my clients because we're proud of what we do. And 99% of our transactions close successfully. And do
you throw up like a congrats on your house?
All the time.
Like
take pictures with them.
Yeah.
The realtor tags us. We encourage them to do that. So I have a really good relationship with a lot of my past clients. A lot of my followers, I would say probably like, damn, 40% of them are probably my past clients. Right? So and
they're so happy on that,
absolutely.
that closing day, and they're
absolutely
in front of the house, and you took the time to go do that.
You give them a shout out, they love it. They start following you.
That's how you earn clients for life, man. Like doing those things, because that's like a memory imprint, you know, like that they have, and they tied it to you.
Oh yeah,
you know what I mean? Like that's why like it's this weird way my brain works, but correlation to like when people are in like not a tragic, but like an intense experience together. it like bonds them. You know what I'm talking about?
That's
So like
so true.
same with like happy experiences or whatever.
Right.
Right. Like it just something magically happens in their brain
I believe.
and then they're a client for life.
People always remember how you made them feel.
Yep.
Not what you said, but how you made them feel.
Yep.
I heard that, read that somewhere.
Yeah,
and
it's not
so true.
what you said, it's how you made them feel.
Absolutely.
Yeah.
They'll remember that forever.
Yeah.
Yeah.
And
again,
that's not a hard thing to do, but it takes effort.
it takes time.
It takes time
and hours
and thought.
and
right?
thought. It's a lot.
Like, how can I make this person remember how I made them feel?
Correct.
Instead of just like, I'm just going to talk to them and talk at them or, you know.
Right. And for those listening, how do you make them feel special is going through the client experience, right? That's what we call it. The client experience. The client experience is that first initial phone call that me or my team makes when we spend 15 minutes with them on the phone, taking a 10-on-3, building that rapport.
Yep.
And then once we collect their documents and pre-approve them, we set up another appointment. Say, congratulations, Jon, you've been pre-approved. So excited for you and your family. When's a good time for you and your husband, Jon, to jump on a Zoom call or come to our office? Our office is here in Riverside. Where do you live? Oh, you live in Corona or Ontario. You're close by. Oh, yeah. Let's do Zoom or let's do in person. They come in either via Zoom or in person. We spend an hour with them, 30 minutes to an hour, going over their options, building rapport. They see me, they see them, right? And then after that, they go into escrow. We have a contract call. And we say, congratulations, now that you're officially in escrow. I want to let you know what the next steps are going to look like. We're going to order the appraisal. Your realtor's going to call you to do the home inspection. We're going to lock your rate. By the way, rates went down or rates went up. This is a payment. We go over the payment again. You send your EMD. This is going to be your estimated cash to close. We're with them every step of the way. So when they close, they have a pleasant experience. And not only that, I always do what's called a post-closing call. So it's anytime you close a deal, you call them, obviously, to say congratulations.
Sure.
On buying,
That's the best call,
buying
right?
your first house. How do you feel? You guys excited? What's the move for planning? Is it this weekend? Oh, the following weekend? Awesome, great. And then we tell them, hey, they're going to get a supplemental. You're going to get a supplemental tax bill. FYI, this is what it looks like. By the way, you're going to get a mortgage correspondence in the next few weeks on where to send your mortgage payment. We let them know what's going to happen and say, hey, by the way, every 6 months I'm going to call you to do a checkup because my promise to you is to make sure you're in the best mortgage at that time. So if rates come down, I want to show what it looks like to refinance. If in one day, if you're thinking about selling in 3 or 4 years and you want to see what that looks like, we're going to be there for you. Yeah, we're going to show you what that looks like.
That's good.
So that's how you make them feel well.
Right.
And then following them on Instagram or Facebook, right? And then like liking their photos of their family and commenting them.
Yeah.
That whole, what I just explained, is that feel good part where you have a client for life.
So good, man.
Thanks, man.
I wish everyone did that, but
it takes a lot of time and effort.
It does.
It does. Because, right, it's not, I guess, it's efficient and it's the long game.
Yep.
It's literally
it's investing in your future because
sure.
I'm telling you, I was a mortgage broker for too many years, a lot of years. And then, when I started FundLoans, it was about 7 years ago. And for probably 4 years, I was the CEO. I still am the CEO of FundLoans, but during that time, I'd still would get just these calls and like past clients, and I wouldn't have to do any more. I wasn't even doing a CRM to keep myself. They'd have my number in their phone. And they'd text me, right? And hey, I'm thinking about refinancing, or hey, I want to buy another house, or hey, and I'm like, well, I'm not doing loans anymore, but let me. I have somebody, that's here at my company that I can have you do it. I'll oversee it, make sure it's, it's good. And, 7 years later, I still get those texts and emails, and it's like, if you put that time in up front, like throughout your career, even if you get out of the mortgage business, you could still have a referral partnership with someone, and just have it's like an annuity.
Oh, absolutely. Literally, like I always tell my guys, you can't look all these customers that we're helping. Yeah. For all these years, this is our 401k, guys.
You know how valuable that is? I mean, it's like like you said, you could pass that on to your son or your daughter. Like it. Yeah.
And people call you because obviously you're a cool dude. So you leave a really good impression on people, right? You're outgoing, you care about people, people get along with you.
And not everybody, you get it done, right?
You get it done. But not everybody has that.
Right.
So if the people who are not like, I meet people all the time. There's guys in my office. I'm like, you don't have the best. I don't say this to them, right? But like, you're not really capturing. Yeah. Right. Kind of monotone. Right. Right. You know your shit, yes, but like you're not building rapport is not. It's kind of hard for you to do because you don't have a lot of empathy. It's really hard for you to relate. That's cool. Whatever. Not everyone has your personality. Sure. Or my personality, for example, right? So naturally,
introverted. Yeah.
So naturally, we're going to reach out to you even when you're even you said you didn't have a CRM, right?
Didn't have a
People
CRM.
would just still reach back out to you because they remember Jon being awesome, right? So imagine now if you had a dialed in CRM with all the systems and processes in place, would it be awesome, right? And for the people who don't have Jon's personality, right, or character when it comes to like, you know, this
follow up, yeah.
Then you build a process where it's like, yeah, you're not that interesting, but if you have a consultation with them before the purchase, either via Zoom or in person, you do a contract call when they open escrow, you do a post closing call, you touch with them on CRM every 6 months or every month, they're gonna remember you.
Yeah,
like you're gonna be the best. They're gonna be their mortgage advisor.
And you know what? All this can be learned. Sure, some people have it naturally, right? Like I'm terrible at details, but I'm naturally good at like talking to people. But like if you have, you could go pick up a book. I mean, I think one of the first books that I bought when I was getting in the mortgage business was this crazy book. Literally, I bought it at Barnes and Nobles, or it might have been Borders, whatever. And it said, like, I think the book title was How to Get Anyone to Do Anything.
I think I saw that book.
You know?
Yeah.
I remember like I got that book, and then it was like Mortgage for Dummies, and it was like one other book. And I remember putting it up on the counter, and the lady, this really cute old lady, she looked at it and she goes, "You better be careful with this, son. This book, you better be careful with this." And I'm like, yeah, I'm just trying to learn sales.
So what are you trying to do, huh? No, it's our promise. I'm in sales.
Yeah. I'm not trying to get anyone to do anything, you know.
I'm not starting a cult.
Yeah. I just want to get some people some mortgages, and I want to be the one that, you know, charms them or sells them and that you know, makes them want to work with me. So
for sure.
But like, you can go learn this stuff. It's not,
oh, for sure.
You know, I'm probably naturally more introverted. You know, I have a kind of, when I take the test of like the personality, it's like I can turn it on or off. You know, I like to have some alone time, I like to have some outgoing time, right? Some people are just naturally super outgoing, right? But like, you can turn it on. You can learn how to become more of a salesperson, more of a person that people like.
Yep.
A lot of it comes down to just talking to them and asking them about them, because people love talking about themselves, right? So if you're inquisitive and you want to make a good impression and make someone feel something, then you have to ask about them and be sincerely interested, right? Yep. Because that's what makes people like you.
Oh, for sure.
Right.
I completely agree with that. And that's part of what we do in our consultations is I always tell people, like, when I'll coach like some newer LOs here and there, man, you're crushing it. What are you doing? I'm like, I don't know what to ask people, like how to build rapport. I'm like, just keep asking them questions about what they do for work. How long
that's why the 1003 is so good, because you ask about your kids. Yep. You ask them about their, you know, do you have any investments? You ask them about, you know,
your employment status, where you work.
What do you do? How long have you been doing that for? I remember someone that, like, early on when I got in the business, they didn't even like really go through the application like you would normally go through it. They just start talking, and they would be like, "So, like, tell me about your job," and they would say, "Oh, cool. How long you been there?" Okay, and they're just taking it right, they're letting them talk, and they're just taking these notes, and then the application's done.
There you go. Tell them the reason. Yep.
Yeah, and it didn't even feel like a transaction. It felt like you were seriously interested in them.
Oh, absolutely. You can complete a 1003 by just having a conversation without even. They're not gonna even realize that you're asking them like questions on an application. Right. They're gonna be like, this guy's just asking me questions about my life and my financial situation. Right. So I'm trying to get a loan, and he's doing it in an eloquent, nice way where it's not like intrusive.
And you don't have to ask what your account numbers are.
No.
You get that from the statements, right? Like, make it easy for them, but do it on
what is
the
your
phone.
Exact balance right now in your checking account?
Yeah.
You just be like, to the penny.
Yeah, roughly like how much you got in your check. You're like, oh, I got this much. Cool. Or you don't even have to ask it. You just say, send me when you're done. Actually, that's what I would do. I wouldn't even ask them about their debts. I wouldn't even ask them about their investments.
Because you're going to run their credit anyways.
Run their credit. You're going to ask them for all their assets to upload or to bring in. And so then you don't have to make it difficult. You know, you're just creating this experience, like you said, like your customer experience. And like, I think it's time to get back to the 1003 taking in person or over the phone, right?
At Wells Fargo, I learned, like, an old school like manager that I had in loans at Wells Fargo Mortgage. He was like, he told me he was old school. Like, he was like 6 years old when I met him. Yeah. I think he's probably already retired. He was like, learn how to take a really, really, really good 1003. And you'll do good in this business. I'm like, that's it? That's all you got for me? Yeah. He's like, I'm like, you ain't talking about like realtors or like getting business? He's like, nope. Learn how to take a really, really good 1003. I'm telling you right now, son. I'm like, okay, thank you. Yeah. And then I always remember, like, take a really good 1003 because it will bite you in the ass if you don't ask. Oh, man. Hey, I didn't ask you, but do you pay child support? Yeah, but you never asked me.
Oh, dead loan.
We're in escrow.
That's killed loans. Those are the loan killers, right?
Oh, for sure.
There's a few loan killers.
Yeah.
That's one. I'm trying to think of other obvious ones that like have killed loans before.
Oh, I can name a bunch.
Real estate owned.
Yeah, they're real estate
Yeah,
owned.
other real estate owned or
like alimony,
the
child
married
support.
portion of it.
Yeah.
Again, not taking a good 1003.
Mm-hmm.
Like you put unmarried on
Mhm.
accident,
Yeah.
or you ask somebody if they're like
Or if you ever filed bankruptcy.
Correct.
Yeah.
correct. Yep.
Yep.
The unmarried thing gets us a lot. FHA loans. That's I don't know. I'm running into this so much lately. People are married legally,
Mm-hmm.
but they're not together with their wives at the moment. But they're still legally married, and they've been not together with their wives for many years. They just don't get officially divorced.
Yeah.
And they're doing an FHA loan, and their paycheck stub and all their filing still says married.
Yep.
But I'm like, okay, you know, FHA loan, we have to run your spouse's credit.
Oh, I
and have
forgot
to
I was
sign.
married.
They're like, ooh, that's not gonna be. I'm like, is that gonna be a problem? Yeah, that's gonna be a problem.
Yeah. There's a lot of stuff we got to now fix.
Yeah.
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 Be
But
good
yeah,
at
man.
taking a 1003.
Be really good.
That's
Listen
not hard.
to my old friend at Wells Fargo when he said, take a really, really good 1003. And I tell that to my guys now. I'm like, take a really good 1003. My guys
and
do.
use it to build rapport.
Of course, yeah.
That's what I remember the most of 1003s. It was just how do you build, and you're taking the time to go through it. It's a little tedious, but try to make it fun, right?
Yeah.
Like try to, and one of the best things I like is like go back to make them feel something, right? And like I think that any good marketing out there is they key in on making you feel something, right?
Oh, for sure.
I mean, Apple is great at that, right? They don't just say here's our music listening device. They're like 1,000 songs in your pocket,
Yeah.
right? This is like this feeling of like something magical, right?
Oh, for
Versus
sure.
like just what it is. Like we're getting you a mortgage. No, we're getting you into something that you're going to have your children, you're going to raise your children in, and they're going to come home and they're going to have these crazy memories. You're going to have the yardstick of their, all their growth.
Oh, absolutely. Like you said, making them feel good during the 1003.
Mhm.
I was taking a 1003 the other day off the cuff because usually my guys take the 1003s, but this particular guy took his 1003 and he's with his job for 39 years. I'll be 38 this month, like in next week. And he started working at his job since 1984. And I'm like, dude,
Same job.
And I'm like, hey, that is freaking awesome. I told him, I'm like, Mr. Hernandez, like you've been working your job for 9 years. I'm like, you've been at your job longer than I've been alive.
Wow.
He chuckled. He's a little old school.
Yeah.
I'm like, what do you do? Like, how is that? And he started opening up about his job. Oh, when I started at my job, it was
Mhm.
only like 20 of us. Now there's over 1,000 employees. We went on and on for like half hour. I'm
And
like,
he'll remember that
and then
conversation.
actually, and he was like a little stern in the beginning, like, oh, okay, mortgage. I'm not too excited about like running my credit and giving you documents.
Right.
After that, he's okay. Well, what do you need, Aaron? Yeah, I'll
Yeah.
give it right. My wife will send it right over to you.
That's
because-
that magic. That's
Absolutely.
that cracking,
Yeah, 10 on 3.
cracking the ice, right?
Yep.
You break the ice, you get into this like where now you're a trusted advisor, you're
Yep.
a friend, you're someone that's gonna gonna do the loans for their grandkids or for their kids and their
Yep.
friends or their cousin, their brother.
Absolutely.
That's how you win.
Yeah, man. I'm super pumped.
Tell me about your Airbnb.
Oh, yeah. So, again, I'm a firm believer of practice what you preach.
Yep.
I can't stand when people advise on mortgages,
But they
at
don't
high
own a
level,
house.
and they don't never owned a house. It's kind of whatever.
Mm-hmm.
So yeah, I practice what I preach, and I see these people, my own customers, buying Airbnbs, right? And I'm doing the financing for them.
Yep.
And I'm like, they could do it, I can do it. I'm in
Right.
loans. I know my shit.
Yeah. Why am I not doing
And
this?
it's just courage
Yeah.
and bravery. So
Yeah.
last year, one of my friends that I was refinancing, I was helping them to buy their second Airbnb. I'm like, man, you guys are, how's the other one that you just bought in Big Bear? They're like, oh, it's killing the game. And I see their bank statements. I'm like,
Dude, yeah. Your mailbox.
I'm like,
money.
and you're a nurse and like you work for the county and they're not even in the loan business and they have the courage to acquire real estate and get into the Airbnb space.
They read Rich Dad Poor Dad.
They did. These are good friends of mine. And they're like, yeah, we're looking to buy as many as we're going to keep going. We're going to build this empire.
Yep.
It really encouraged me. I'm like, 'cause I have a couple rentals, right? In my primary residence. I'm like, you know what? I don't have an Airbnb. That's
Yep.
cool. And I'm like, hey, were you guys doing this together? Like, can we, like, are you interested? I'm like, yeah, I know we could do a vacation home 10% down.
Yeah.
They're like, we could split it down the middle. They're like, dude, we're interested. Let's talk. We met
5%
up,
each. Yeah.
5% each, split everything down the middle. We bought I bought my first, it was their like third or fourth, but I partnered up with them. We bought in Ruidoso, New Mexico. It's like a skiing resort in New Mexico.
Mm-hmm.
I bought the house, never even went there. I went there like a year later, like this past winter.
Sight unseen.
Correct, but it's really nice. It's booked all the time. We're killing it. So yeah, man, I'm excited about it because it's paying all the mortgage. It's paying the mortgage, all the expenses, the cleaning fees, everything else that comes with it, and then we still have money left over. Not a lot because we split it. Yeah. But like as long as the mortgage pays itself, a tax deduction, right?
Yep. And there's something magical called appreciation.
And then equity appreciation. Yep. That's you have someone else pay you're gonna have Airbnb guests pay your mortgage down for the next 10 to 15 years. And if we want to sell this house in 10 years and buy something else or split ways, we could split 150, 200 grand. No problem, right? I'll be cool with that.
I'm telling you, it's so hard to save 150 grand.
Yeah.
Right in your bank account.
Oh.
But if you take 15 grand or 20, whatever, and you put it into a Airbnb property, and then all of a sudden you have 150,000 in equity, like in save several years, you're like, that would have never done, like your bank account would have never done that. Stock market probably would have never done that. But this house, it did that.
I always tell people real estate is the best vehicle to financial success.
Yeah.
And the greatest vehicle to acquire wealth, real wealth.
Absolutely.
It is because it's tried and true. Real estate for hundreds of years, buying land and buying real estate. So I'm a big believer in you got to own real estate if you're going to advise other people at a high level.
That's good.
You got to own real estate. So yeah, I'm looking to buy another one hopefully this summer, but you know, with the rates being where they're at, right? I might have to hit you up, FundLoans. Get you know,
do a little DSCR or something like
creative
that.
Financing. Yeah, absolutely.
Yeah, I mean, because that, especially buying Airbnb is you can do the debt service coverage loan and you don't
love it.
Yeah, if you had a down year, whatever, the property's still doing well and you can just you got the down payment.
Yeah. And then now me going through the Airbnb and then now my friends, they've kind of graduated from like the traditional conventional space to non-QM, right? So I'll probably be on the next one. I'll probably send it over here to you guys. But now more than ever, I'm really advising people. I'll be honest with you. I never in my career was always conventional FHA VA. I've done a couple non-QM in the past, but like literally it came at a perfect time where I was invited on this podcast because like in the last like 2 months I've been getting so many requests on non-QM.
It's good.
And I'm like, cool. I know we work with you guys. So we have a few loans that are getting approved right now in underwriting before they start shopping for a house. That's what I love about your process. You get to do a TBD.
Yeah.
Underwritten approval. I'm all about that. Yeah. Because I have a good name and a good reputation, I would hate to tell somebody, oh yeah, I added up your deposits on your bank statements for the last 12 months. I think you're good for this. Go find a house. And then it goes to underwriting. I'm like, oh no, it doesn't work that way. So I'm like, I sent her 2 or 3 loans your guys' way. I'm like, pre-approve them. I don't care if it takes 2 weeks, 3 weeks, because my borrowers they know. I want to know that I'm good for it before I start shopping for a house because it's my name on the line. They want to have a good experience.
Absolutely. Yeah. It is a great tool to have, the FHA, the VA, all the government, all the different loans, and then having non-QM and being good at non-QM.
Oh, absolutely.
Is a huge, so like, if you're down on your business right now, it's like get the guidelines, learn about the product, and then you can be that advisor to your customer, right? And then you can expand your customer base.
Yeah, and at our office, and what really intrigued me with your name that popped up, like your company, FundLoans, I was hearing success stories in the last couple of months. Like, oh, use FundLoans. Like, I just closed one with them. Super cool. 2 weeks, 3 weeks. I'm like, what?
That's cool. I love hearing that.
Yeah, I'm like, okay, cool. I gotta get up on game.
Yeah.
So now I'm like, hey, well, you don't qualify. But have you heard of a DSCR loan?
Yeah.
They're like, tell me more. When I get back to the office, I got to price some guy out because he's really interested. He wants like, I need to buy a property. I don't report anything on my taxes, but I have a bunch of money and I make a lot of money.
Yeah.
I'm like, then the DSCR.
Asset-only product.
There you go.
Yeah.
Yeah.
It's fun. What don't you like about non-QM? Are you probably too new at it to really not know?
To be honest with you, so far, I've done a couple.
Yeah.
With other companies that I'm not going to mention. Sure. I think one of them is out of business now. And it was just a shit show. Like before, during, it was a shit show.
Yeah, like and not all non-QM lenders are the same, right?
Correct.
It's just like it's like going like to a grocery store, or like Walmart versus Nordstrom. It's like there's going to be different.
Of course,
yeah.
Just like every lender is going to be different,
right?
And it's all about the team, right? And the underwriting process and the
good
processor,
account executive,
an AE, Shane here. I've been working with him. I've been texting him and emailing him a lot the last couple months.
Shout out to Shane Colson.
There you go, Shane. But yeah, man, I mean, I don't have anything bad to say besides the two experiences that I had a couple years back with other non-QM investors. Like 1 year in escrow was a pain in the butt. We had to extend escrow a couple times. But besides that, I know the loan game. I mean, I did loans at Wells Fargo.
Right.
Like nothing was set in stone until like you got your keys.
Yeah.
Right. So I understand like what goes into it.
Yeah. But
yeah, besides that, nothing really bad to say about it. But I'm looking forward to do more business with you guys, and hopefully these loans work out. Yeah.
Yeah, I hope so too.
I'm sure they will, because I made sure I vetted them as much as possible. Like, it's a good candidate. So.
The thing about non-QM that I don't like, I love, the fact that, loans can be boring, right? Because, you get a, what's it called? Help me, a DU, right?
Oh.
DULP, right? And it's just like this, real boring process, W-2, everything. But like, I love about non-QM, it's always so different. There's always unique stories. Like,
right.
Oh, you have a business. Oh, what's this business about? What do you do? What do you do? Oh, how do you make your money? Then you see their bank statement. You're like, holy crap, they got a $200,000 deposit. Then they got a $30,000 deposit. And you're like, wow. And you've seen these like kind of interesting stories, and you it's just not like normal lending. It's a little more out of the box. It's a little more creative. You're dealing with different things. That's what I like about it. What I don't like about it is like, again, when you have complex things, there's always going to be that, am I going to find some string that's going to unravel everything, right?
Right.
But it keeps you on your toes.
Yeah, for sure. That's funny you mentioned earlier, like mortgages are kind of boring.
Yeah.
To us, I mean, yes, they are, but like we do this for a living, and there's a lot that goes into it.
Yeah.
And your day is not the same every single day, especially when you're in files. I was telling someone this the other day, I forgot who it was. I went to Starbucks. I was having like a really busy day. So I was on my phone like, yeah, thanks. How much? $4? Okay, great. She's like, Starbucks are super nice. She's like, so what do you do for a living? I'm like, huh? I'm like, what's
really?
up?
You want to
like,
know?
Give me my coffee. She's like, yeah, what do you do for work? I think she was asking everybody that day, like a new girl.
Yeah.
And she's like, I do home loans for a living, mortgages. She's like, oh, that sounds boring. I'm sorry. I was like, what the heck? And she was dead serious.
Oh, I feel so sorry for you.
I'm like, okay, yeah.
Like, you work at Starbucks.
And I'm like, if you only knew that it's not boring.
No.
Yeah. I'm like, it's different every single day, but I chuckled and I laugh. I'm like, oh yeah, it's not that boring, believe me. She's like, really?
You mean like making coffees?
Yeah, she's like, okay, have a good day. I just thought that was funny. I told the guys at work.
Funny. That's funny.
Yeah, man.
Yeah, I mean, I would be so bored if I worked at Starbucks.
Oh, for sure.
And that'd smell terrible at the end of the day.
Yeah, I'm not a big fan of coffee.
Yeah.
Like, believe it or not, I don't drink a lot of coffee. So people, like my wife loves coffee. She loves Starbucks, but I don't drink a lot of coffee. I drink maybe like a couple cups of coffee a week, and I don't even finish the cup.
Yeah, it's most mortgage people I think do.
Oh yeah.
But like if you
I drink
don't,
tequila though.
Yeah, tequila. It's kind of like coffee.
Yeah, I drink tequila. This is my coffee. This is my coffee. This is my energy.
It's good. Yeah, I love
really
tequila.
good, by the way.
Thank you.
Yeah.
What about, like one thing I like to ask is all my guests is, everyone's made it to where they are because of someone else. Not always, but like everyone's kind of had some help along the way, right? Like, so who would you shout out to if you could, that maybe just did something, helped you?
You know what? Like when you ask me that question, somebody sticks out to me. Like in terms of like my business, like my wife was my big support system, my parents and stuff like that. But like in the actual mortgage real estate business, my good friend and best realtor partner, one of my best realtor partners and a good friend of mine, Jon Aguirre, because when I was at Wells Fargo, I met him through a friend. He was doing really well in real estate in our market. He was like a well-known realtor. And I'm like, oh, okay, I got to talk to realtors. My buddy's like, yeah, let me introduce you. We had lunch. He's like, oh yeah, I've used somebody else, man. Like I've been using this other guy for 8 years. Like, it's not going to like.
Yeah, I already got my guy.
Now you could do open houses with my team and I, but like whatever you get there, but I'm not ever going to send you a deal. We started hanging out, became friends, started drinking together, drinking tequila. He's a big tequila guy too. And I'm like, okay, great. And 2, 3, 4 years went by. 2018, he sent me a deal because one of the deals fell out, and I killed it. I did a great job, and was one of his agents on his team, Jaime. And Jaime's like, dude, Aron killed it. His customers loved him. Like, it's a great extension of our team.
Yep.
Is to our lender to be on top of his shit.
Yep.
And they had a great experience. Like, they already sent him a referral.
That's cool.
Like, they sent him a referral.
Because you did a good job.
Because I did a good job.
Yeah.
And he was just like, okay. And then
now you're up on his radar?
Yep. And then we met up again, and then I'm like, dude. And then we made it official. We've been working exclusively together. He's been sending me most of his deals, all of his deals, since 2018. So he was like the big shark, the first big shark that I acquired in real estate, and he
But
referred
that
me
took
up.
4 years.
It did. It did.
And
Yeah.
it was worthwhile.
Yeah, and he sent me a lot of business.
But not only did you
Yeah.
get a referral partner, you have a friend, like someone that
correct.
it's not just a transaction.
And-
Like you
and-
guys are buddies.
Absolutely, and that's why I'm a firm believer of do business with people that you like. Life is too short to do business with people that you don't like.
True.
The other day, I fired a realtor via email.
Like you were
I'm like,
a dickhead.
in a nice way,
Right.
in a nice way.
Oh, you didn't call him a dickhead.
No. And I'm like, it just wasn't a good fit.
Most realtors are great, but
Yeah.
there's the couple out there that are not.
No,
nice.
of course.
They're not
Yeah.
nice people.
And if you
in
can get
general.
along with your realtor and you hang out and you guys respect each other,
Yep.
that's what it's all about. So
Totally.
I say him because when I got into like the direct lending world, like out of Wells Fargo, he referred me so many clients that it was my livelihood,
That's cool.
which was awesome, and I'm almost forever grateful. You know what I mean?
Does he have a podcast?
He does not. He
Let's
should
get him-
come
let's
on.
get-
though.
yeah, let's get
him on here. Jon. He's
Let's
the
do it. Let's do it,
Jon,
Jon. This
but
is
his
a
real name is
challenge.
Juan. Yeah.
Let's do it. We'll drink some tequila.
Oh
together.
yeah, he loves tequila.
That'd be cool.
Yeah, he loves tequila.
Well, awesome, man. I'm stoked that you came out and
Thank you.
got on the podcast.
Thanks,
here.
man. Thanks for having me, dude.
Yeah, this has been cool.
Great tequila, by the way.
How does someone find you if someone's listening and they want to hit you up?
I'm not sure if I look there or here, whatever. Aaron Home Loans on Instagram. I mean, I have Facebook too, but more Instagram. Aaron Home Loans. Yeah.
Awesome, man.
Aaron with one A.
A-R-O-N.
TikTok too. There you go.
And TikTok.
I got it. My guy got me a TikTok.
Are you doing
account.
some TikToks, like making some videos or dance videos? I'm just
Marcos?
kidding.
A
little bit.
We close your
I
home
told you I'm
loan.
old school.
Yeah.
I mean, social media was hard for me in the beginning, just because I'm like, to be honest with you, I'm an introverted, quiet dude too, like to myself.
Yeah.
Right. But I understand that a few years ago, like Instagram and social media was like super crucial for your business.
Right.
So I'm getting more and more courage to post more and be more consistent with it. But yeah, TikTok, we do have a TikTok account.
TikTok's getting.
I
mean, it's popular, but it's growing. I think with the older demographic. 'Cause
Is it?
people,
Oh yeah, my dad sends me TikTok videos all the time. He's
Yeah.
like 70 years old.
Yeah.
I'm like, Dad, like all you do is send me TikTok videos all day long.
It's
Like other loan
Yeah.
people like talking about like what they do.
yeah.
He's oh look at this. I'm like, yeah, Dad, that's a FHA loan, 3.5% down.
It's I know this.
He's like, yeah, but you got to talk about it. I'm like, huh? My dad's telling me
Your
that.
dad said, yeah.
I'm
so
like,
if
damn.
he
It's
is-
like, damn, you're right. Like the other day, Brandon and I did. I'm like, let's just do a video like FHA 3.5% down.
Yeah.
That's my favorite loan.
Yeah.
And you'll be surprised to this day. It's a common knowledge. You could buy a house with 3.5% on FHA.
But people don't know that.
90% of the people are like, so FHA, what is that again? How much is it? 3.1% down? Is it
Or
6.1?
30%,
Yeah.
or they don't know.
20, I'm
right?
like, it's 3.5% down. They're like, oh, okay.
And what is that? How do you
Right.
calculate that? And,
Exactly.
Right.
So it's the power of social media. We're talking about on the way over here. It's here.
It's big. It's only going to keep growing.
Doing podcasts like this.
Yep. Cutting it up, putting
Instagram.
little stuff on TikTok.
It's a must. So I'm glad I'm here. My first podcast.
We'll give you some clips to post.
Heck yeah, dude.
Yeah.
Cheers,
Okay.
bro.
Cheers. Thanks for coming. Thanks for listening, you guys. And like I said, please like, share, subscribe. It helps our algorithm, helps us stay relevant, moves us up the ladder of social media. So we
Yep.
want to be the number one mortgage podcast out there. We think we're on our way. So we will keep putting out good content, and as long as you keep listening. So thanks everybody, and
Thank you.
see you on the next one.
The $1 Million Mortgage Experience Podcast.